Joining us right now, Eva Agi, Investment Advisor Representative, Gerber Kawasaki Wealth and Investment Management. Eva, great to see you. Glad you're here. I don't know how you go about picking. I know each one probably has its own story where you can begin in the world of home builders because Lennar is on your list. Why Lennar in the home builders, and do you like Lennar more than the other home builders?
Well, first of all, Nicole, thank you so much for having me. As far as Lennar goes, we really like them specifically, obviously, because there's a big pent-up for single states. So we need about 1 million homes a year. Lennar produces about 50,000 of those every year. We like Lennar because it's number one, a great entry point as far as the stock goes. But in addition to that, they also have a growth play. So they actually own part of Open Door. That process is going to make the home buying process so much easier for new home buyers in the country. And I think that the switch is going to be digital moving forward. So they're really on top of that. Why we like it.
Yeah, I mean, it certainly seems like it's been the right time for home builders. Are you concerned about rising material costs or homes that have been started but not finished, or at 98.70? I mean, obviously you think it has some upside potential. Is it 5 or 10% or maybe more than that?
So as far as rising material costs, I think that plays to Lennar's advantage. We want to be invested right now, not so much towards tech economy as it's been this past year with rising inflation, but more so in the physical economy. I think that really helps Lennar moving forward. As far as upside potential, I think about a 5% is reasonable moving forward.
Right. Tell me about MGM Resorts. Certainly drawing some interest. Travel's picking up to Vegas. Maybe people won't go to Europe or other places. They may be more likely to sort of stick around until COVID really settles. Tell me more about MGM.
The MGM, of course, is really poised to capitalize on the pent-up demand in travel, but more than that, about 40% of their revenue comes from Vegas in general and also online gambling. Their earnings have been really strong, but what we're looking at here overall is a return to travel domestically, not internationally just yet. So when we see folks in the United States, about 50% of the adult population has both of their vaccines now, travel is going to increase, and MGM is going to be just the place where they do that.
Mm-hmm. It makes sense. It really does. We'll continue to watch all those names, though we did hear some pullbacks or less positive news about Macau, so we have to consider that. But I think you're right on about people may travel to Vegas rather than going abroad or somewhere else. And then it's all about our pets. I mean, we will stop at nothing for our pets. You have ticker symbol WOOF for Petco. Went public during the pandemic. What's the growth case here?
So they actually reported a 27% increase in revenue this past quarter. They have 1.2 million new customers. Overall, we love the pet industry because it's not a one-time expense. You'll go back month after month to spend money on your pet. So overall, looking at this company and the pet industry at large as a place where we can see strong revenue, strong guidance moving forward, but also a really strong business flow. That's why we really like Petco overall.
Yeah, it makes sense. And, we heard so many stories about how many pets were adopted. I'm starting to hear some about some being returned, which is really sad. I guess as people go back to work, they realize they can't handle it. But WOOF right now trading at 22.81 certainly has been at higher levels prior. So I see where you think there could be some upside potential. Tell me about your general market outlook.
Our general market outlook is really a shift away from tech. I mean, we still like it. Those tech companies have really strong fundamentals, but more so investing in the physical economy. So going out, services, travel, those are really big themes for us right now.
Yeah, no doubt. And the shift away from tech, when do you think it might change back to tech? I mean, today we saw a sell rating on Apple. We're going to be talking about tech later in the show. But why is it more about the reopening plays? Is that where you see the possible jump?
Well, tech has had about a 90% increase since the March 2020 low. So it's not surprising that it'll fizzle out here. What we have to look at is where's the economy going overall? So where are new opportunities coming? And that's more so in the physical economy, because as people move away, they go back to work. So the stay-at-home plays are no longer as interesting moving forward. And stock stock prices are always looking 6+ months ahead. And we need to see those themes of the economy at large play into our stock pick.
Yeah, absolutely. And when we think about, as people get back out, you talked about services and travel, and we heard almost 2 million people now traveling, which is the most since the pandemic. So we'll continue to watch the cruise lines and airlines and the casinos, as you said. Is there anything that you would put on the side right now other than tech that's not necessarily as attractive?
What's not necessarily as attractive would be probably the more speculative plays. We're no longer looking at such high growth for the short term. That said, I still strongly believe that in the long term, tech does comes back strong again. These revenues have never been higher, so that's a good indication for the longer term.
Eva, it's great to chat with you. Thank you so much. Eva Agi, Investment Advisor Representative, Gerber Kawasaki Wealth Investment Management. Great to see you.